Hello everyone and welcome back to Sudden Wealth. I hope you guys forgive my current setup in during my holidays. If you do enjoy the content, please consider dropping that like and subscribe. I'd like to thank you because my views have still been quite decent, despite the fact that obviously I'm in a suboptimal setup and I'm in a more difficult situation than usual. If you do enjoy the content, don't forget drop that like and subscribe as I've mentioned, and that's the only thing that I ask. Now let's go straight to it. Bonds keep on doing fine and going up. A little bit of a fear trade. That's good in the sense of. So I've said this before. In my view, the Fed and the other central banks have taken out the risk from particularly the stock markets. Crypto still carries a lot of risk. That's why you have such a big reward. But the Fed has pretty much taken out all the risk from the stock market. Talking about indices as a group of stocks. Can an individual stock go to zero? Sure. Can a stock like, for example, like Intel, which had its all-time high 20 years ago, can it underperform everything else? Of course. Individual stocks, anything is possible. I'm saying overall, the stock market, think about the S&P, Dow Jones, NASDAQ, have been the Fed and the other central banks have taken out the risk from the markets. Now, this is very important for people to understand. Does that mean that the stocks can never go down? Does that mean that the stock market can never have a bad year? Does it mean that we will never see a bear market again? The answer to all those questions, in my opinion, don't forget, this is my opinion, not my facts, not the facts of life. No, just my opinion. In my view, all the answer to those questions is no. You can have a bear market, just like 2022. You can have big drawdowns in terms of sell-offs, just like during the Japanese stock market, or during COVID, for example. You can also have big drawdowns during that time period. That's absolutely fine. My point is, within a fairly short time frame, you will see new all-time highs in all those assets. Now, Bitcoin, which is considered the blue chip, the biggest blue chip of crypto, if you will, it made its all-time high in November 2021, and March 2024, you were back to new all-time highs. Even gold did an all-time high in 2011, and by 2021, you were making new all-time highs, and then now in 2024, you made again new all-time highs. Silver seems to be the exception, which is a complete garbage asset because it's basically gold, is the equivalent of, in my view, the shitcoin of the precious metals and the shitcoins of the stock market, like the Russell 2000. But even the Russell 2000, I think, will eventually make a new all-time high. But there was a reason when I made the prediction last year about, the NASDAQ, S&P and Dow Jones making new all-time highs before the end of Q1 2024. The reason why I didn't say Russell is because Russell tracks the real economy the closest. And as I've mentioned before, the real economy has nothing to do with the stock market. Now, when I mean by taking out the risk, is the insertions of liquidity, the money printing, the lowering of interest rates, all of those things debase your currency. They take value out of your currency, but not in the traditional way. Not when you go, buy groceries. I mean, this time around also when you went to buy groceries, but usually it's on the asset prices. You want to buy a house, but these houses keep getting more expensive. You want to buy stocks, but these stocks keep on getting more expensive. And it seems that even if the fundamentals of the economy keep getting worse, somehow the stocks keep going up. And people call it, oh, this is a hyper bubble, this is a super bubble, this is a mega bubble. Say, no, you're paying a price for the stock market appreciation, which is, if you want to have ownership of assets, it's getting, on average, 8, 10, 12% more expensive every single year. Now, assets mean deferred consumption, means store of wealth, means your wealth will be higher into the future so you can enjoy it. And when I say enjoy, it can be leaving it to your kids, can be spending it all yourself. Depends. Every people have a different definition of enjoy it. But the idea is you are putting something on assets to protect your future. That's the key. What's happening is if you combine CPI inflation plus the increase in money supply, which leads to the asset price inflation, very few assets beat that combo. Namely, since 2008, only tech stocks and crypto beat that. All the others, real estate does fairly well, the S&P does fine, gold does terribly, silver is not even, there's no point in commenting. But basically that's about it. So every time that you have these big drawdowns or corrections in the stock market, in my view, I always view it as a temporary, unless, here is the key, something dramatic in the monetary system changes. Now, I always give this example. For example, look at the Venezuelan stock market. It's the best performing stock market of all time. The problem is when you convert it into bolivars and you try to buy anything, you can't. So it means nothing. But if you look at it like year on year in terms of gains, sure, it's 50% up, 100% up, 1,000% up. But then inflation is up, 1,000,000%, right? So who cares? That's, I think, a good characterization of what it means. So I do believe what we've done so far is, again, retest a few of the moving averages in the stocks. We are seeing these correct. I mean, the Dow Jones made a new all-time high less than 2 weeks ago, and people are, panicking. The S&P, I think, made a new all-time high or came extremely close to it like a week ago, right, or 10 days ago. But in any case, the problem is because our currency, our money, is getting faker and faker. These drawdowns and moves up are more volatile. Just like the Venezuelan stock market, but that is the extreme of volatility. Sometimes it goes down 50% in a week, and then it goes up 1,000% over the year. I mean, it's very up and down, right? It's very, very crazy. That tends to happen. So these big moves. So basically, for example, any market that's going up needs some time to cool off, needs some time to sell off. Particularly if the news are bad, just like the job reports, etc. This need to start to price negative things in a perfect world that they had priced in before. So that's the difference, you see. They need to price in non-perfection versus perfection. That's it. And those things tend to be a bit more abrupt nowadays because one, the currency is faker. Number two, a lot of more people are involved in the markets that they used to be in the past. So you have a lot of inexperienced people that at the first 4% sell-off, they sell everything they have, and then it goes at 10%, and they go chase after it, and they get destroyed. Unfortunately, it's something they will need to learn by themselves. Now, when it comes to crypto, you guys may have heard me last week where I said, look, the 50 weekly moving average for Bitcoin is at around 53,250. We went there, we tested it, we bounced back. Is it over? Is the sell-off over? There's a good chance it is. Can it go a little bit lower? Sure. Will it go again back to the 40K mark? I don't think so. But can we go closer to 50K? Yes. I do expect us to actually start bouncing back a little bit, but there's that possibility. September is traditionally a bad month for crypto. Now, I still expect the second half of September to probably be quite better than people expect, based on the fact that this cycle has been the front-running cycle. Meaning, the halving was front-run, the pump. The sell-off of the halving was also front-run. The meme coin season also was front-run. So you have a lot of things that usually come later in the cycle that came forward about a month or so versus previous cycles. But the question that I ask myself is, okay, let's say that I think we started the month at what, 60K or something. Let's say that we end up the month at 54K. That means a 10% drop. That means it would be the fourth red monthly candle after the halving, which is it different from previous cycles? The answer is no. 2012, we had 3 months, 3 red candles after the halving. 2016, we had 4. 2020, we had 4. 2024, we are in the 4th one. What happened afterward? October and November were the best months. And I am seeing a lot of bottom signals that I'm looking to see. So, for example, if I think that the cycle will be slightly front run, meaning maybe we won't have the entire month of September negative, maybe it's only the first half, for example, or the first 10 days. We already tested a big support area, which was 53,250. We bounced so far from it. But what else am I liking to see? First of all, Peter Schiff was saying if you bought gold fund instead of Bitcoin in March, when the ETFs came out, you would be better in gold. So gold won. This is what I said. Gold won. Although Bitcoin is up in the year versus gold, it was up last year. It will be up, I'm pretty sure, this year, and it will be up the next. But once again, he's declaring victory. So he predicted so far, he was the bottom signal twice. So in October 2022, when FTX went bankrupt, he said, this is not crypto winter, this is crypto extinction. The day that he posted that was the bottom, or very close to the bottom. Maybe we went down, $500 more or something, but it was extremely close. Then on that Monday, that Sunday to Monday, on the Japanese stock market, Bitcoin went to 48,000, 47,950, whatever. And he said, witnessing a crypto graveyard. You see the point, right? Crypto extinction, crypto graveyard. As soon as he posted that, we went straight up. And now he's talking about, he's declaring gold the victor and Bitcoin is finished. And he said that the bubble has been pricked, the air is coming out, and that's it, it's finished. Bitcoin is now going down and down and down and down forever, which means that we're getting close to the time of pumping. Now, Jim Cramer is saying that more selling is coming like never seen before. That's also good. Then the Bitcoin and crypto fear and greed index. For people who don't know, when you are in maximum euphoria and you're close to a top, you have greed to the max. When we have FTX bankruptcy, bottom of the bear market, you have extreme fear. Obviously, you don't need to say that when you reach extreme fear, you've pretty much exhausted the sellers. And when you're getting to extreme greed, you exhausted the buyers. It's very obvious. It's always the opposite of the feeling within the market. So we've touched last week extreme fear in crypto. That is great. And people say, oh, what do you mean it's great? That means people are selling the heck of it. Yes, but we are getting to the end of it. This feeling of poor taste in your mouth, this feeling of feeling like an idiot, this feeling of maybe I made the wrong decision, it's classical feelings that come close to the bottoms, as well as readings of extreme fear and strong fear, etc. What I'm trying to say is, if we would be at 65,000 with extreme greed, that is a very bad sign. That means that we are already at a price where the greed is pushed to the limits, which means that more likely than not, we are about to make a top. Now, does that mean that we make the top on the exact day? Can we be in fear for longer? Yes. Sometimes we are 1, 2, 3 weeks in fear, or even extreme fear. That's possible. But you'll see that even though you can go down, you don't go down massive amounts anymore. That's the point. So we've touched already extreme fear. And then we have the cyclicality of the cycle. Global liquidity is pushing higher again. The Fed and the Treasury have about more than $1 trillion to come at Q4 to pump the markets. Election period is always volatile in nature, but it's typically volatile to the upside, regardless of who wins, by the way. But I think with Trump, it will be on steroids, basically. So my question is that I'm asking myself is, okay, are we red this month? Yes. Does it suck? Sure. Is there any change versus other cycles to cause me to be extremely concerned? No. And by the way, when I say October and November are the best performing months, that doesn't mean that as soon as we turn 1st of October, we go up 20%. That's not what it means. What it means is that overall, those 2 months are the best that crypto has. That's it. Particularly in halving years, meaning in the years where there's a Bitcoin halving. So that's it. That's my analysis. That's my expectation. I think there's a good chance that we may have seen the local bottom for this move. We retest some important moving averages. The fear is to the maximum. Bottom signals all over the place. Can we still go down a little bit? Sure, we can. But are we closer to the floor or to the ceiling? In my personal opinion, and this video is nothing but my personal opinion, I think we are closer to the floor than to the ceiling. And with that, thank you very much for your support. I hope you enjoyed the video. Don't forget to like and subscribe, and I'll catch you in the next one.